welcome back to my channel. This is Lillian. Today we're going to talk about RESP and all the basic ideas about RESP. So first of all, what is RESP? It's Registered Education Savings Plan. So that is a plan that the Canadian government rolled out to help Canadian residents to save money for the higher education. So the money grows tax-free while it is in your RESP, and you do not get a tax deduction for the money that you put into the RESP. So the money you put into, that is your after-tax money. So that's very different from RRSP, which is for the retirement. So money paid out of the RESP as an educational assistance payments is taxed in the hands of the student. So since many students have very little or no income, in that case, so usually they withdraw the money tax-free. There are three different types of RESP account. So there's family RESP, individual RESP, and a group RESP accounts. Depends on where you open your account. Most families in Canada will open the family RESP account. The reason for that is that you can group together a couple siblings in one account and get the grant and all the investment within one account. It's just easier to manage. But there are also individual RESPs available, and a lot of times if it's grandparents, they want to help their grandchildren for the higher education later on, and they can open individual RESP. So group RESP are organized for some RESP trust, and they will have their own set of rules for this kind of RESP. Basically, the idea is that everyone pool their money together, and then they're gonna go invest together, and then that's why it's more organized and hands-free investments. RESP have three major benefits: government grants, and tax-deferred investing, and tax-efficient withdrawals. So the government grant, we will talk in detail very soon. And tax-deferred investing is when you put the money in there during the time that you are saving for your children's education, that money grows tax-free every year. So but by the time that the student take out the money for their higher education, that's the time that they have to pay income tax on the growing part, not the whole thing, the growing part. But because most students, they have very little income or no income, so by the time they take the money out, and most of them don't have income tax applied to these growth. So now let's talk about the grants. And there are different kinds of grants. The first of all we're going to talk about is called a CESG, Canada Education Savings Grant. So for this one is the one that we hear the most. When you're putting $100 into the RESP account, the government will match up $20. Depends on the family income. Some families may be able to get 40% match up for the first $500 of contribution. So the second grant we are talking about here is called the Canada Learning Bond, CLB. So for this kind of grant, you do not have to contribute anything into the RESP to have the match up. So this is purely based on your family income and also the number of children that you have. And the Government of Canada, they have a table which I included in here that you can see if you are qualified for this or not. So if you do, this one maximum, like lifetime, is $2,000. In a way of the first year, CLB will pay you $500 if you qualify, and then every year after, as long as you qualify, so there will be $100 added into this RESP account. And for the RESP account, the contribution limit is $50,000 altogether. For example, if you have $50,000 sitting there, you just don't know what to do, you just want to put it in RESP, you can do that. The only thing is that once you put in there, you cannot put in any money in there. And because 1 year, the maximum grant will only be 500 to 600, depends on your income, so that you will only get $500 to $600 instead of having that every single year, because next year you already cannot put in any extra contribution in there. So what happens if your children don't go to school? Well, there's a couple options. First of all, RESP can stay open for a very long time, and then maybe wait for a year or two, and your child might decide to go to school and they can still use this RESP. And while this time that they are not using it, and the money inside the investments is also grow tax deferred. Or if you just know your children will not use that for school and in any way, you can also transfer this RESP amount into your RRSP if you have room. The only thing is that all the grants from the government you will have to return them back, because you are not using this money for higher education anymore. So do you have to just use RESP money for pay for the tuition? Well, at withdrawal time, and as long as you have the confirmation from the school you're going to, and that school is a recognized school, you can withdraw the money and use it for whatever reason. You can use it for pay for the tuition, you can use it for pay for rent. So basically you withdraw and then you can do anything to do with it. Depends on which company that you put your RESP in, there might be specific rules from that company. So that is something that you have to make sure that you understand. For example, some group RESP companies, they might have very specific rules of how you can withdraw and how much you can withdraw. So where you can open RESP account, you can open RESP account in banks, you can open them in credit union, investment company, insurance company. You can have group RESP trust, and also you can have it in self-directed brokerage. The money you contributed into RESP, you can use it to buy stocks, bonds, ETF, options, mutual fund, segregated fund, just keep it in cash or GIC. It's all good. So if you have any specific questions, you can contact me with the link in the description below, or just leave a comment on this video. Thank you for watching. I'll see you next time.